Welcome back to On the Money. Brad Johansson with Ryan Wheelis of Allied Wealth. We're thrilled you're with us. Thanks so much for joining us. I know your time is precious, and time changes. Time changes everything. But we develop kind of who we are over decades, and that becomes our identity, Ryan. We've developed this. I know how to do this for 10, 20, 30, 40 years. I've been accumulating. I've been amassing what I think is a pretty good war chest. I haven't done the other part, which is distribution. So I want to talk a little bit about asset preservation. Can you lead me into that as we move from one identity maybe to another?
Well, I think the issue is that we are taught to save and accumulate as we call it at Allied Wealth, climb the retirement mountain.
Okay.
It's pretty cool, by the way, is we'll have people come in and ask us, where am I on this mountain, right? Where am I, right? So it's pretty neat. So what we equate to is that as you begin saving money for retirement, you start adding money into your portfolio. It comes out of your paycheck each month, each week, however you get paid. The money goes into a 401k, it gets matched, gets market growth. And you amass a sum of money that allows you to finance the lifestyle you want to live in your golden years, all right? So that's going up. And the whole thing there is growth, go, all right? Well, when you get to the top of the mountain, you have to depend upon these dollars to finance your lifestyle.
Right.
All right. And so what the mindset shift that has to occur here is a move from that growth and accumulation mode over to asset preservation and distribution mode. All right. And what's really interesting, by the way, Brad, is at Allied Wealth, we're specialists. Okay. We specialize.
We know that already.
All right. And so you work with a growth and accumulation advisor to get you to the top of the mountain.
Yeah.
All right. But you've got to change your strategy and shift over to someone like us who focuses on retirement. That's what we do. We specialize in preservation of assets and distribution so that your money lasts longer than you do. All right.
When you say, and I know you've specialized, but I want to key in on this, that why do you, and we've talked about this, building a team of people who do the best at what they do. Why do you have people do the climb and some people do the descent?
Well, I think that a lot of the companies out there are really focused on growth and accumulation. They're what we call accumulation specialists. And they sometimes...
Isn't that because that's where the money's made for them?
I think they think it's what people want. All right, let me give you an example.
Okay.
I'm going to get a little digression here, okay?
Right.
But so every year we evaluate money managers. All right. And so there was a money manager magazine, an article out recently that talked about this top money manager. All right. So they were the best performing money manager in 2022, and the market was down significantly. The bond market was also down significantly. Okay. So what happened is I picked up the phone and called them. Hey guys, I'm interested in you guys managing some of the capital for our clients at Allied Wealth. Again, a team of professionals. Even I use a team.
Yes.
Okay.
Yes.
And so I had a conversation with a guy on the phone who actually manages the money. And I said, hey man, what I'm looking for is, and what my clients want, is the most amount of return they can get with the least amount of drawdown, of loss potential in a down market.
Max drawdown, yeah.
And the lowest amount of fees.
Okay.
You know what the guy told me?
He said what?
We can't do that. That's not what we do here. And this is what's mind-boggling to me, and what so many people don't realize about the growth and accumulation side of the business, is these guys are managers, and they run money for large mutual fund companies, pension funds, and institutional managers, okay, or institutional companies. And they're given an index, all right? And what they have to do is use the stocks in that index to try and beat the index, all right? So the S&P 500 is their benchmark, okay? They're trying to beat the S&P 500 using the 500 stocks in the S&P. They can allocate however they want to, but there's one thing they can't do. They cannot hold cash. So what happens here is mind-boggling, because if the index is up 10% and they're up 15%, their clients are ecstatic because they beat the index by 5%.
Because that was the goal.
That was the goal. But here's what happens that so many people don't know about, Brad, and this is just such an important thing. When the market falls, okay, and the market's down 40%, all right, these managers go down 35%. And guess what? Their clients are ecstatic because they beat the market by 5%. Now, here's what's mind-boggling to me. So many people don't know this is how money on the growth and accumulation side of the mountain, so to speak, is managed. All right? So the question I have for you is this. Your manager did the job, didn't they? because the market's down.
Because you set the goal.
Well, the market's down 40%.
And we did better.
They're down 35.
Yeah.
They did better than the market. So they're down 35%. My question to you is this, folks. Who lost? Who lost in that scenario? And the answer is you did. And guess what? You had no idea that could even happen. And let me go even further, okay? A lot of folks use mutual funds, all right? And they use mutual funds to grow their capital. Well, and what they think is this mutual fund manager in here is moving stuff around in effort to maximize returns in up markets and mitigate downside risk in down markets. But what they don't know is the manager of that mutual fund is operating with handcuffs on, all right? There's Regulation 35D1 that requires, it's called the naming rule, by the way, okay? And if you call yourself a large cap mutual fund, you are required to keep 80% of the fund's assets invested in large cap stocks 100% of the time. So let's look at this for a second. These managers are not stupid. They're not idiots. They know what they're doing, all right? So let's say this manager in this mutual fund sees the freight train of 2008 barreling down the track setup, a big spotlight, horns honking, whole 9 yards, right? And what they want to do is get out, but they can't because of the regulations that they're under. And what they can do is if you have $100,000 of your money in that mutual fund, they can put $20,000 in cash. But the remaining $80,000 or 80% of the capital in the fund must stay invested in large cap stocks. And they're going to take the full brunt of the market loss.
And you don't apologize that you do it differently.
I do not. And that's one of the major differences of working with a growth and accumulation specialist and a retirement specialist like me who understands those unique differences and understands how to allocate capital in a way to get you the highest rate of return we possibly can while taking the least amount of risk and the lowest fee structure possible while also providing guaranteed income for life to fill your non-discretionary expenses as long as you have breath in your body.
Because it's simple. Better is better. Why wouldn't you go with somebody who has the whole world in front of them? Because you've spent your whole time climbing this mountain and you haven't been told the real story about where the money's going. We're talking about asset preservation. So just as Ryan said, that you have money left as long as you have breath in your body. I like that idea. I like that better is better. That's why Allied Wealth does it differently. Maybe it's time for a second opinion. 844-944-7555. Do better. Call now.